me from VS1. I'm so excited to have you guys today on our webinar on LinkedIn, as well as actually on YouTube, Twitter, and here on Riverside, where we're going to be discussing RWA tokenization, specifically on XRPL and beyond, by the way, with real builders from the ecosystem. I will take maybe 1 more minute to give a chance to everyone to join the webinar, and then we can start maybe at 12:05 Eastern time here, or whatever 05 time in your area. And we will start, as I said, in 2 minutes or 3 minutes. We will be onboarding the speakers and giving people a chance to actually go through the login process or register process, just to make sure that everyone is able to see us and interact with us and ask questions. By the way, this is all recorded, so for those who missed it, don't worry. We will be sending you the recording, and we'll be back in a few seconds when the other speakers are joined. Thank you so much. All right, I guess that our speakers are potentially having issues connecting, so we can't keep waiting. I will kickstart the event, and then whenever the other speakers can join, I will introduce them or give them a chance to introduce themselves. So today we're going to be talking about like a subject that we care a lot about, especially here at VS1, since that's exactly what we're building. RWA tokenization, and we're building it on XRPL. So we're going to be covering why XRPL and how and all of that jazz. But before diving into the subject, I wanted to introduce two of our guest speakers that are already here. I'm going to go with alphabetical order, just like randomly like that. So David, how about you introduce yourself and your project to the audience?
Thanks, Femi. It's a pleasure being here with you and your audience, and Jakob. So I'm David Lumiashvili, co-founder and CEO of Identomat. We help organizations basically onboard, verify, and monitor their customers, being it individual or business customers, and basically ensure digital trust and compliance online. So we've been on the market for over 6 years now. We started just before COVID, and are now present in over 20 countries. We have 150 plus customers in 8 different verticals, starting from traditional banking and fintech to crypto and blockchain, all the way to government and government-aligned agencies. Happy to dive deeper into certain details of our product operations, partnerships when questions arise. But for now, happy to pass forward to Jacob.
Perfect. Yeah, Jacob, your turn.
Hi guys, Femi and David Hussein. Thank you for having us. My name is Jacob. I am co-founder of Soil and Orco Group. Soil offers stable yields on EVMs and XRPL. So we also have in a group one of the biggest private credit funds in in Eastern Europe, and that is our backbone, how we generate the transparent yield for, let's say, stable coin and digital asset owners. So we know that for many years there was a problem in a, let's say, blockchain and DeFi space, that a lot of different protocols, they were promising users high yields and returns, but always there was a problem with the transparency. No one ever know how the yield is generated, and there was no single possibility to verify the source of the yield. And it very often it ended up with the defaults, and ended up with that the users lost their money. So that's how we came up with the idea, so that maybe we can build things different. And we, a couple of years ago, we built the Soil on the EVMs, and our main idea was to offer users in the blockchain space access to the transparent, stable, and predictable yield that is fully backed by real-world assets. What do we mean by the real-world assets? So, as I said at the beginning, so our related party is Mount TFI, one of the leading private credit funds in Central and Eastern Europe. And simply what we do, we generate yield in a real economy. So if you got stable coins, you can allocate your stable coins in the Soil protocol, and then we use it to finance the small and medium companies. We have a diversified portfolio of investments. We exactly show how we generate the yield, and we generate the yield, let's say, in the real world economy, and then bring back this yield to pay the interest for our users. And that is what we do. Recently, we also kicked off XRP yield. So right now, not only stable coins are in use. So right now we are using USDC, we are using RLUSD on XRPL, and also owners of XRP right now can put them into the work. And if you got a idle XRP, you can allocate your XRP and generate quite nice yield also in our protocol.
I think the XRP army is going to appreciate that. And talking about that, we have Hussein from the XRPL Foundation. We're happy to have you on board. How about you introduce yourself and maybe introduce XRPL? And XRPL Foundation is for those who don't necessarily know much about you guys. And then we'll dive deeper into the subject of today.
Absolutely. Yeah. I'm really stoked to be with all of you guys here on this panel. And thanks for the awesome webinar here. Yeah, I'm Hussein. I go by Vet typically on the socials. People know me there as that. I've been in crypto for a very long time. Um, Built a few companies on the XRP Ledger, and then moved to the XRP Ledger Foundation in May 2026 here with the whole team. And yeah, so the XRP Ledger Foundation is a nonprofit based in France, in Paris. And we are working with other stakeholders in the ecosystem like Ripple, XRP Comet, and upcoming XRP Asia. And together we are contributing to the core protocol of the XRPL, means reviews, amendments, securities, to community, means events, creator grants, and things like that, as well as like with onboarding and business development, supporting projects to find PMF essentially. And alongside of this, of course, we are collaborating also with projects to build things for the community. One of the things that we have been collaborating with VS1, for example, is the reference implementation for the lending protocol, which is basically an open source application that anybody can fork, use for the XRPL that uses the lending protocol, which turned out to be a very important part, specifically when we talk to institutions and others, is like, what is the reference implementation, just to have a good orientation how to start. So that's some of the things that we are doing, alongside, of course, maintaining the XRP Ledger validator UNL that we run. DONL from published from the XRPLF has currently 35 validators on the XRP ledger, among that's out of like 140, 150 validators in total. And yeah, very excited to dive with you guys into the lending protocol, which is a very exciting amendment.
Yeah, it is indeed, and we're deep into that. Obviously, as you mentioned, I'm gonna potentially introduce myself as well. I
Yeah.
sometimes I just skip. This is Femi. I've also been in crypto for like more than actually 12, 13 years now. I've discovered Bitcoin very early. I was super happy and super lucky, and then unlucky when I lost everything. That's a different story. We are VS1. We're building an RWA tokenization protocol on XRPL. We have chosen XRPL for multiple reasons, which I will cover a little bit later. And we are based out of Georgia, the country, not the state, because of obvious reasons as well. We think that the emerging economies are underserved and they have higher needs in terms of like tokenization and even beyond the tokenization compared to mature markets where tokenization doesn't really move the needle that much, right? Like it's cool, it's nice, but it like mature markets don't necessarily need it, while emerging markets do need it for multiple reasons, which I will come back to. So today we wanted to cover multiple aspects of tokenization because I always say tokenization is the first step. It's not the end goal. It's where it starts, right? Like it's not like, okay, we tokenized something. It could be either a stable coin or a Pokemon card or or even stock or like a building or something. Anything could be tokenized, but I don't think it should stop there. I think we need to do more than just like tokenizing and issuing things on chain. Um, but that requires multiple primitives depending on the chain where we're developing and building and shipping things. And XRPL has been shipping a lot of primitives, like from I would say about a year and a half ago, 2 years ago, until today, and moving forward in the future. I would like to maybe start with you, Hussein, and ask the question about, can you give us like a high level overview of the primitives that XRPL are shipping or shipped already that are a good fit for people who are building into this space, knowing that most of the space is like institutions who are coming from TradFi, who are super regulated in their jurisdiction. They like blockchain, but they cannot go rogue. They cannot go like cowboys and do whatever you want. They're not degens, and they will never be degens. So yeah, back to you, Hussein.
Yeah, a big differentiator that the XRP ledger has that is very different to other blockchains to start with is that it has no smart contracts, right? That comes with different upsides and downsides, but mainly that all the functionalities that the XRP ledger has and these primitives are built into the protocol. So for an institution, what does it mean is basically all of this is ready out of the box. They can immediately use it. They don't need to develop it themselves or depend on someone else, right? They can just use it because it's built into the protocol and it's an API call essentially. That comes with a lot of advantages, right? That they can enjoy by doing so, and those primitives have been expanding, over the years. So more and more features have been coming to the XRP ledger that really leverage the low cost nature of the XRPL. And also the settlement time, the predictability of the fees, and things like this. So lining out, I would say one of the biggest one is definitely around the automated market maker. We have a native automated market maker on the XRP ledger who was built on something like the Uniswap v2, a very established one, and with a few additional things to it. We have NFTs, we have tokens. They are all native. They are not additional smart contracts that you would generate on other chains. And then very recently, we introduced a bunch of compliance features to the XRPL. So credentials, permission domains, permission decks. These are some of the features that people may have seen also last year from Hyperliquid, for example. Permission decks. These are very important for institutions so that they know who are their trading counterparties are. So these things are all native on the XRP ledger, ready to be used as we speak. And in addition to these things, DeFi, to round up basically DeFi portfolio, are the upcoming ones like the lending protocol, which we will definitely talk more about it, which is enabling like on-chain credit origination and lending and borrowing, which is a very important backbone of DeFi, right? This is super, super critical, and rounds up essentially our portfolio of functionalities and features that we can offer to institutions and retail alike, right? That want to make use of their capital and have better mobility here on chain. But this is currently what we offer on the XRP Ledger. And yeah, and that all on a foundation, on really a layer that is operating since 2012. It's one of the chains that has been permanently in the top 10, always through up and down. And after Bitcoin, it's the second oldest in the top 10. So, yeah.
Yeah, I think that's a very, very good summary of like many of the primitives that XRPL is offering to institutions and retail as well. I would like to maybe dive a little bit deeper into the concept of MPTs. Like a lot of people are comfortable with like defining what's a token on chain, but MPTs are slightly different. Can you maybe clarify a little bit to the audience?
Yeah, we have tokens on the XRP Ledger. They are trust line based. They are also issued tokens. Um, MPTs are also issued tokens, but they're slightly different. They have additional functionalities and other advantages. One of it is they allow you to attach an arbitrary URI that you can put into it, which is very helpful, right? So you can put like contract data, other information that is attached to the token that you want to be part of the token. So you can put in a URI field into it. That's why it's called semi-fungible token, the MPT. So it's very good for RWA, for tokenization, and for fractionalizing things. Very ideal, the MPT. In addition, the MPTs are also very have a low footprint on the XRP ledger, so they're very storage efficient versus the trust line based ones. Plus, because of their architecture, that how they are built, they are also going to have features that the other token, the original trust line based token, doesn't have. For example, confidential transfer. So we are basically, as part of it, right now up for voting. There's privacy amendments upcoming, which allow MPTs to be also private in terms of balances and the transfer of the balances, which is very exciting. So essentially, you get basically encrypted tokens on the XRP ledger, or shielded tokens for those on the XRP ledger through MPTs, right? That's what MPTs allows. But in a fundamental point of view, it's issued tokens, very much ideal for RWAs.
Perfect. Um, I'm personally familiar with these, so I'm trying to figure out like what should someone who's not familiar learn about. Like obviously, you mentioned obviously the permission domains, permission dexes. We covered a little bit of the MPTs. We'll probably come back to them. But as you said, like two of the like super exciting primitives are coming soon, or being voted on, or being kind of finalized as we speak, which are the single asset vault and the lending protocol. Like they work together, obviously.
Yep.
Um, I'm personally super excited to get these because this is obviously what solves like the problem of like what I just mentioned earlier of saying tokenization is just the beginning, right? Like tokenizing something and issuing like an MPT, for example, is the first step. But with XLS 65 and 66, which are single asset vaults and the lending protocol, then we will be able to borrow against those assets and then obviously either loop back or participate to other DeFi things, and then obviously do things a little bit more advanced than just like, okay, I have a portion of this Pokemon card and I'm sitting on it, right? Like, and that's it, right? um what's the status on those? Like, are we getting close to the final line, or like, can you give us a little bit more clarity there?
That's $1 million question, right?
Mhm.
And yeah, XLS 66 and 65 are looking very much good right now in terms of um, from a security point of view. There's been like a lot of testing and a lot of audits been done, reviews, AI red teaming. That the core team did really a fantastic job on this feature. Um, right now, what we are seeing, we're right now in the phase of go to market. A lot of the projects who are committing to this amendment and feature are signaling to validators, hey, look, This is what it brings utility to the chain. This is what we don't want to do, to basically, you know, get a good understanding for people who are voting on this amendment, what this will do to the XRP ledger. Is it a useful feature or not? And as we all agree that it is a very useful feature and great, it's also good to have like these recordings so everybody can see, hey, what we are talking about here from the people building essentially on this chain, and have been building on other chains as well, like having experience about, hey, these primitives are very powerful and they bring a lot of utility to the network. And I think this is something that we want to signal more to validators, and that's sort of the last piece of the puzzle for lending
Yeah,
on the XRP
yeah.
ledger.
Um, what we've seen in, I would say, in TradFi, because we interact with like banks, institutions, and financial companies and governments, is they were like, okay, we don't like blockchain because it's like free for all, like anybody can do anything, and then you can't really track them, and we're like, okay, yes and no, obviously, and they care a lot about like who does what, and then are you authorized to do such an action, which is, I think, a good segue to David here, who built Identomat, which really focuses on identity solutions, which are required, obviously, to be compliant. We can talk about Europe, which passed their MiCA, I think, on July 1st this year, or any other jurisdictions that require like hard compliance rules. And then maybe David, you can walk us through the journey there and what you're building, and then how do you actually offer these tools to people like us, for example, who are building protocols for lending and borrowing, so we also be compliant. Our approach is not to be vertically integrated to build everything ourselves. Our approach is technically to partner with people who are doing things better than we would do. So on the identity, we would like to partner with you guys at Entomat, and even on distribution, we would go with Soil. The idea is really, I can not having to reinvent the wheel everywhere, but really use the best partners and then focus on our core, and do it better as well. So let's go back to identity, KYC, KYB. Can you walk us through all this, like, I would say ecosystem, because it is an ecosystem, and maybe not too deep, because I remember spending almost an hour just talking about this, David, a few weeks back. Yeah.
Yes, yes. And as I mentioned, during our first conversation, RWAs are really one of my favorite subjects, kind of. So because it really brings in, it kind of highlights the importance of a multi-modularity in terms of what compliance and identity tools need to bring to the table. Because as you mentioned, there are different jurisdictions with sometimes vastly different requirements, right? Regulatory requirements. And if a one vendor or even multiple vendors need to serve this market, they need to be able to basically be orchestrated in vastly different types of workflows often. For example, one jurisdiction might require just point in time KYC, which can be as simple as just scan your ID, take a selfie, verify you're a real human, prove that you own this ID, and then do maybe a simple sanction screening and package that up. Either you basically send it as a PDF document, or you can that now the tokenization part is on your side, but that could be as simple as that. But on the other hand, there are jurisdictions that require continuous monitoring, right, of counterparties. Each transaction needs to not sometimes, not basically, it's a requirement, need to have verified counterparties. If it's an organization involved in the transaction, you have to basically have verified identities of all of the beneficiaries. You potentially need to also have basically proof of funds. You might need to the proof of address. There are so many different potential checks and verifications that need to be done. It really stresses the capabilities boundary for us. And so we've been honestly, this has been one of the main drivers for our current recent expansion in our feature set. We now, I can honestly say, we are almost end-to-end provider of risk-based workflow orchestration for compliance and customer verification flows. But again, like we still need to have partnerships with identity data providers, with basically wallet screening providers, because it's almost impossible to do this job single-handedly. So very excited to be partnering with you. To just having these conversations are also very important to get a consolidated view of where the market's moving. As I said, like RWA is really, I think they bring another layer to the blockchain trilemma, the compliance layer, which was not really a sexy subject in blockchain, I know. But now that now that crypto's in the White House, you have to mass adoption is can be beneficial. So, and compliance is part of it. And but I think it's possible to do it in a privacy preserving, confidential way, unless that sometimes then escalations are needed. And I think that can be done with basically what I think XRPL is doing, like regulation as code and kind of proactive compliance type of solutions. And so I'm very excited. Happy to delve deeper in some of these subjects. I think one webinar might not be enough, but
Yeah, I remember that we did dive deeper into this subject, and I was impressed by how many different jurisdictions you guys are covering, because and how fast those are changing over time. They're all changing their rules all the time, and you guys need to stay up to date. Otherwise, like, the solution doesn't work. And I also like the idea of like doing KYC and doing like the compliance things in a private way, right? But without like having to really share your identity with every protocol you interact with. That is problematic, obviously. And like Hussein, you mentioned that maybe with MPTs in a very near future, we'll also have like encrypted transactions. So because in real life, I'm not showing like what's in my bank account to the whole planet, right? Like if I transact with a merchant, they don't have to know how much left I have in my account. So in crypto, that's a big problem. Yes, it's transparent, but like at the same time, we need some privacy, at least certain level of privacy. And then obviously there's issues like money laundering and all the jazz that we keep hearing like from regulators for years now. But like those same people are laundering cash, right? Like the cash that we can touch in real life. So we're not gonna say let's stop using cash. Like we need to find ways to like stay compliant and stay safe at the same time. And I, our industry is so global that we need solutions like Identomat that has that global reach. Because otherwise,
Yeah.
us based in Georgia, for example, it's easy for us to think, okay, we're going to be compliant in Georgia. But then what happens if someone wants to buy the tokenized assets from another country? Then we need to be compliant over there too. So to be compliant across the globe, I think it's better to go with an identity solution that covers that aspect. And then the issuers will be compliant in their own jurisdiction. And that is technically the only way for us to be compliant, because we don't have to become an issuer unless we have a setup like you guys at Soil, where you have the TradFi company and the blockchain company working together, because you're kind of managing both. So can
Yep.
you tell us how you first how do you manage to give like a certain level of transparency to people who are investing into Soil products on what's going on off chain, and then what's the synergy between the off chain and on chain interaction, and is there any vision to move everything to one bucket, or are you guys happy with this like two silos approach?
Yeah. Let me start answering the question with coming back to the KYC, because at the very beginning, when we started building the protocol, we talked with some, let's say, advisors, partners, and they were saying that if we will implement any KYC solutions, it will limit access of the certain group of the customers, and we will never see the proper traction. And for us, it was from the very beginning, as the guys from the, let's say, TrustFi, that we want to cooperate with the institutions, and there's actually this is the, let's say, the ocean. When there is a volume, there is a lot of customers, there is a significant number of transactions, and we want to work with them rather than make, let's say, happy some degens that want to stay anonymous. And for us, that was from the very beginning the obvious choice. And we didn't want to have any shortcuts, even though that we knew that we will have to answer for many months that why you need to provide a KYC to access the protocol. Still, our protocol is live on XRPL, and we are still facing every single day some questions that there are some protocols that you simply connect your wallet and that's it, you can interact with, and why you need to provide the KYC in our protocol. And this is somehow linked with our leg, how we generate the yield, because we work with the financial institutions and we cannot cooperate with them if we are not aware of what is the source of the fund. So that's the one thing. But the other thing that we also faced, it's sometimes doing a KYC saves the money for customers, because if you got your wallet and you do KYC, and we can somehow link, so not somehow, we can link your identity with your wallet, with your transactions, with your allocations. In case when your wallet is compromised or you lose access to your wallet, we are still able to verify you and you will get access to your funds. Because otherwise, if you are completely anonymous, for us, it would be no chance at all to verify or somehow link some person that actually lost the access to the wallet. And this is the case that actually we faced recently. And this is the only way how you can somehow still get the access to your funds. Yeah, when you cooperate with a project, with the companies that is compliant with the regulations, got the full onboarding process, and got your details and can link you with your activity. So there are also the, let's say, positive ways for users, even though that you can feel that you are losing your, let's say, privacy, or you are not 100% anonymous anymore. So that's the one thing I wanted to mention. The second thing is that coming back to the RWAs. So I'm a big fan of RWAs. I see that at the end of the day, there will be no real world assets. There will be just assets, and everything will be on chain. So that's the ultimate goal. But and especially what you said at the very beginning, that I think that this is a huge opportunity for, let's say, less developed countries or regions or undeveloped countries, when actually over the blockchain you can get access to the financial products or investment product that actually were not available to you before. Because right now the onboarding process is fast. Access to the products that are tokenized, you can access the products that were not available to you because there were high entry barriers. If you want to invest, let's say, in some products, even in the one of the biggest funds, it's a Beetle fund, it's a tokenized fund of the BlackRock. If you want to access it over the securitized platform, the minimum ticket is $5 million. Yeah? So not even mentioning when you want to, in Europe, invest in a private credit fund, you need to invest at least $40,000 or euros. So these are the barriers for many users, let's say, in a TradFi, that with the protocols we can simply, this kind of barriers we can remove. And let's imagine that someone, let's say, from the Africa or with the, let's say, act or is living in a, let's say, in a regions that they cannot trust the local financial system and so on, banking system. Using a blockchain, they can get the access to the, let's say, financial instruments all over the world within a second with a insignificant cost. So that's the great opportunity and the great innovation that blockchain gives. But we need to remember that the tokenization is not solving all the problems, because at the end of the day, you still got the risk of the underlying asset. If you tokenize the real estate, it doesn't mean that it cannot, you cannot ruin this, or it can still collapse, yeah, and you will have to insure the the real estate, because otherwise you've got a token, a tokenized form of the real estate that do not exist anymore. So at the end of the day, it is worthless. Yeah. So still need to remember of it that tokenizing is it's a distribution layer. It's a utility layer because you can unlock some liquidity based on the assets that you've got. But still, we need to remember that there is still it's linked with the risk of the underlying assets. And after this long intro, let me answer the question about how we let's say manage to connect blockchain space and the TradFi. So we really count on it that more and more products will be in tokenized form. But as for now, we have a few tokenized products, but it's another, like, let's say, the range of the products of right now available fully on chain do not allow us to create a well diversified portfolio as we would like to do, and cannot allocate our funds in all the industries that we would like to do. So that's why we need to partially off ramp and invest funds in a TradFi. That's what we do. Part of our funds, if you allocate your stable coins in our protocol, part of the funds is off ramped and invested in the private credit funds, and these funds then are allocated to finance small and medium corporates. And these corporates got nothing in common with the blockchain, because very often these are the real estate companies, factories, manufacturing companies. So different kind of businesses that are operating in the real world that actually are looking for the alternative source of the liquidity other than, let's say, a bank loan. And then our own team, due diligence team, is responsible for screening the companies, originating all the proper collaterals that serve as a collateral in case of if there is a default. So if the company got some difficulties to pay back the loan, so you've got the collaterals that at the day you can turn into the cash and still cover the principal and the interest. So and then if we allocate the funds in there, they are paying our interest, and then we bring back this interest on chain. So this is how we do it right now. So we are working with the financial institutions. As I said, our related party is one of the biggest private credit funds in the Central and Eastern Europe, with the exceptional results over the last 8 years. So this is our backbone of our protocol. This is how we generate the yields on stable coins. But we do see that more and more protocols are, or more financial instruments are tokenized, and ultimately our goal is also to tokenize all our funds. And in this way, if we got the token, let's say investment certificates in a purely tokenized form, we don't have to do all this, let's say, off-ramping procedures. We can directly allocate it using a stable coins. For us, it's faster. You don't have to interact with the, let's say, traditional banking system, because it takes time to onboard, going through the banking system, then on-ramp, off-ramp, and so on. There, of course, are some fees in there. Over the weekend, you cannot redeem it, and so on. So these are all these, let's say, pain points related to the TradFi. But we see more and more products are coming on chain, and that's promising. For us, having on-chain all these products will allow us also to do a, let's say, dynamic portfolio rebalancing, so we can, let's say, invest in financial instruments and rebalance the portfolio on the continuous way. So it gives us to have even bigger returns. So yeah, so that's what we do right now. So part of our portfolio is invested this way. Of course, we also have some allocations in the already tokenized form, mainly some US treasuries that are in the tokenized form. So we are investing in it directly using, let's say, payment rates on the blockchain. So this is a fast and cheaper allocation method for us. But yeah, we are looking for more and more products to go on chain, and for us it will be opportunity to even more diversify the portfolio in a more efficient way, cheapest way, and the fastest way. So at the very beginning, I don't know, a few years ago, we were a bit more optimistic about the, let's say, adoption curve. Of course, the regulations this is a, let's say, kind of like an obstacle. I don't want to say obstacle, but of course there are different jurisdictions, and you need to, if you are a global company like a protocol on the blockchain, sometimes there are some challenges to how you can market your product and how you can offer different products in a different, let's say, regions all over the world. So of course, these are the challenges that still we need to face. But every single month is giving us more and more products on chain, more and more, let's say, adoption. And yeah, the future is bright. And as I said at the beginning, at the end of the day, the ultimate goal is that there will be no real world asset. We'll have just assets, everything will be on chain.
Yeah, I can't agree more with that. Obviously, I think assets will be tokenized. I wanted to come back to the reason why we've chosen actually to operate in Georgia, like besides the fact that like the founder is Georgian. um, I mentioned it a little bit earlier, but the growing markets are underserved and they do have a bigger need of these new primitives. Like in America or in Europe, everything is already available. Like everything is already kind of very accessible to everyone, although certain products require that you have a certain amount to become an investor. That is kind of barrier to entry, but you do have access to almost everything else. Well, that everything else is not even accessible to certain markets because you're not there. You can't create an account. You can't like have like officially access to those products, and tokenization gives that access. The other thing is companies from emerging economies do not have the same access to liquidity and to funds as the companies that are based in the US, for example. So tokenizing, um, like tokenizing their whole company or tokenizing, I don't know, bonds or tokenizing some debt could also be a way for them to reach a global audience, which is something very important that we care a lot about. We've been talking about the issuance side of things and then the security and compliance. We didn't talk much about the distribution side, which tokenization also offers solutions there. And I was hoping that we would have Anodos kind of covering this a little bit more in depth today, but unfortunately they could not join.
Yeah, let me,
Mhm,
sorry for interrupting. Let me jump in and one thing to add to distribution,
mhm,
because as you said that, of course, let's say in the emerging markets, the access to the capital is a bit limited, but we also need to see, or we do have an experience in the last few years that there were some protocols, let's say the so-called private credit protocols, that they were financing some, let's say, exotic projects all over the world, and it ended up always with a massive default.
mhm,
So I think that the distribution layer over the blockchain is it's a huge advantage. But at the end of the day, if you want to extend the loan, let's say to a company in Georgia, in Algeria, or I don't know, in Nairobi, you still need to do a due diligence, because sending the money is easy, but the tricky part is to get the money back.
exactly.
One thing is extending the loan. The second thing is what kind of collateral you will get. The problem is how you will get the collateral on chain. Let's say that you want to have like a pledge or mortgage, or you've had like you want to use some shares as a collateral or some buildings as a collateral. At the end of the day, how you will put it on chain if it's not tokenized right now, to use it as a collateral. So it's a still, I said, if we will get someday, let's say, real estate in a really tokenized form, then you can, for example, unlock the additional value and put it on chain as a collateral, then get a loan against it. Yeah, so that will be the additional opportunity. But right now, it's the tricky part is that you still need to, let's say, do your job. It's in off chain, let's say, due diligence and so on, to verify your customer and the partner if you will get the money back. That's because, as I said, so there were many projects that offered the loans to finance some. I do remember one. There was the decarbonization farm in Egypt, I guess. This
Mhm.
is one I do remember, and it ended up with a massive collapse.
This
Yeah.
is a good point because at the end of the day, there's a lot of counterparty risk involved in a lot of these places, and you need to trust sometimes a huge chain of parties, right, to get where you want. And they are not always transparent. They maybe have no reputation, insurance. Like there's a bunch of things that you need to check essentially, as you were correct said, because that's sort of the other side of the blockchain, right? Everybody can deploy a protocol. Everybody can launch a product on chain. that is great, but that also means that everybody can launch something on chain. Um, yeah.
I want to add the one thing that, because you asked also about it and I didn't reply to it, how to, if you got a funds, if you allocate your funds on chain, and as we do, part of the funds is allocated off chain, how do you verify the assets? Or because you cannot track it off chain. So we use two partners. One of them is vLayer. So what they do, they got access to our partners when we do have access, when we do have assets like a private credit funds or financial institutions that we work with. They've got a direct access to them without our, let's say, interactions. And they do check the balance of our assets in the institutions and put the information on chain. So that's how you can verify. So what they're doing, they are simply do the proof of existence or proof of assets in a TradFi and put it on chain. So that's as for now how we can, let's say, somehow provide the more transparency and more visibility about our asset portfolio by using a third party, let's say, verification protocols that connect with our partners and verify the funds at source. Yeah, so that's what we do right now to give the customers more and more proofs and comfort that actually the assets that we do say that we have that actually exist and are in a certain institution. So this is, let's say, the solution for now.
Yeah, I think you covered actually one of the questions I had to ask later. So thank you for that. Because obviously, when we're tokenizing real world assets, we do need what we call in the industry oracles to feed us with information from the real world to on chain, so we can take a decision. And I think you mentioned something a little bit earlier about like how the risk has moved from on chain to off chain with RWAs, or at least partially, because there's still some risk on chain. We can still get hacked and whatever. But with like protocols like XRPL and tokens like the MPTs, for example, there's less risk on chain because there's no smart contract to be hacked. And there's like the risk surface becomes really small. The real risk becomes actually auditing those products in real life, right? Like, does that company exist? Have they been doing business for a long time? Are they trustable? Are they like I don't know, authorized to operate in that jurisdiction or not? All of that is what we need to do now. And we as a protocol, we're doing some of it. So when we, for example, tokenized a bond, there is a lot that goes into like tokenizing that bond that is not technical at all. We do a lot of research, we do a lot of interviews, we talk to the company that issuing the bond, but also talk to all the financial institutions around them to see, are they trustworthy, what's their credit score, like should we actually trust these guys, or actually have our clients trust those guys, right? Because people trust us even if we're saying do your own research. People, when they see a product on our website, they click on it, they buy it, they're buying our product. They don't care if the product is from a four-side broker in Georgia, for example. They care about the product. I found it on VS1 website, so they will come after us. And you mentioned something important, which is what happens in cases of default, right? Like, who's responsible? Is it us? Is it whoever is issuing that asset? Is it someone else? Like, and who is responsible on chain? Who's responsible in real life? Do we have to go to that jurisdiction or that country to kind of try and get something out of them? If there's no collateral, obviously, because sometimes it's easy to have a collateral, sometimes it's kind of not easy. So the conversation really moves to, okay, who should we trust? How do we do our due diligence in the end? Because obviously we can't trust everyone. And the trust layer moved off chain. But there are people who are now like us, like you guys, by the way, that are doing all those researches and they're doing the due diligence and maybe sharing those reports on chain for other people to just like, okay, I'm buying this product. Let me do some quick research. Let me read at least like the TLDR, and then I'm gonna decide if I want to dive deeper into that or not. Because sometimes I'm not interested from the get go. Um, I see the time is flying, and I would like to maybe conclude on 2 points. The first one is, all of this is super exciting. there are many protocols are building and shipping, and all the chains are trying to push RWA and tokenization. Um, a completely almost unrelated question. Do you think that RWAs are gonna kill like meme coins and then like the old school like tokens from the ICO era where like it was like mainly trust me, I have these tokens vested for 4 years and then buy them now you're made like it's gonna go to the moon? Or do you think that RWAs will live on their own planet and these other tokens, the meme coins and then like protocol tokens, will also keep like popping all the time? We've seen a lot happening in the past few days. What's your take on this? And anyone can answer this.
I think there will still be, in my opinion, even though I'm the least least credible on this subject, but there will be room for meme coins still, especially for audience that likes the some interest move to prediction markets, but some of that type of kind of gambling mentality will still persist, I think. But for people who are serious about investing and real money, then I think RWAs will capture that market, a big part of that market. That's from my point of view.
Yeah, yeah. Um, I'm gonna give you all like 1 or 2 minutes to kind of maybe share if anything is coming and of importance to with the audience. But I see that there's people asking questions on the chat. Um, Someone is asking why are we in Georgia and like, can we describe the advantages? I think like there's multiple advantages. Georgia, for people who don't know, is like a very like a early adopter of crypto industry in general. You can see like Bitcoin ATMs everywhere in Tbilisi. Like companies are accepting payments in crypto, and the government, which is even more important, is seriously considering like tokenization, like building like a stable coin based on the Georgian lari. The national bank Georgia is like having a sandbox, which we're in, by the way, for tokenization of RWAs. So it's pretty advanced on that front compared to other growing economies. And the second question I see is like RWAs are going to be competing with banks and financial institutions because they're cutting the middleman. I would say yes and no to that because I think our WAs will mainly be issued by those same financial institutions, not by anyone. I cannot, me personally, say I have these are WAs. You can buy SpaceX stocks through my website. I can pretend to, but I don't think I have the authority of doing so. So I think that the reframing of the question is like, does RWA compete with banks and financial institutions? I would say no. RWAs are an additional tool in their toolbox, and they will adopt it because it gives them efficiency, cuts time and money. So since these are like financial institutions, it's hard to say no, right? So they're all adopting it at the pace they can. Uh,
Exactly.
yeah.
Especially
Uh,
that what we right now, for many years, always it's been like everyone was waiting what will happen when the market will open. Yeah, I'm talking about let's say stock exchange in the US, and what we will see in the nearest future, because we know that the project is in progress to implement changes, that the market, thanks to the fact that the market will be more efficient when stocks are let's say put on chain over the tokenized form, we will see 24/7 market open, and you will get the access to your liquidity always. It's not a problem that you will get some different in some valuations over the weekend, and you will not get the access over the weekend to your funds because market is closed over the weekend. And these are the RWAs also, yeah. So it means that simply institutions will implement and will use the RWAs in their product portfolio, and I don't think it's like an element of even competition, because actually it's a part of it that they will embrace it and use it and offer the customers better products, different products, and they will save a lot of money thanks to it. I do remember the report that BlackRock stated that thanks to the fact that they tokenize the money market fund, they save something like a 20% on let's say administrative costs.
Yeah.
So one thing is that distribution access to the access for the customers, and on the side of the company, it's a better distribution and cost saving and bigger and better efficiency. So only on the positive outcome of the tokenization.
Yeah,
Yeah.
24/7 nature is really underrated. It's so simple, but it's just already like enough for a lot of people, right? It's like I can access 24/7 my assets. That's amazing. And collateral mobility is also very important. There's so many people who are actually very interested in very short term yield for, let's say, 5 hour window where they have, right, impossible to do this like with TradFi systems, just too slow. You just leave it like there. But on crypto rails, you're much more flexible. You can maximize your capital, and because it's on a blockchain tech, which I like, is as you mentioned, like about the competition, I think it's more that it's a level playing field. Everybody who wants to build and contribute, right, they can build as well at the same layer that institutions are building. At the end of the day, it's another infrastructure tool for everybody.
That's true. And what I know that sometimes it's like a big word, but I do like the word that the tokenization is a kind of like a democratization of access to the to investment, to the products, and unlocks a lot of liquidity and a lot of value. Because I do like the vision when actually you've got some, let's say, valuable things tokenized and you own it, and you right now you store it and you cannot somehow use it to leverage your position. And let's assume that you've got I don't know, some real estate in a tokenized form that you can use as a collateral and get a better offer in your bank to get a loan to invest in something, or if you want to, let's say, use a collateral to buy something, and so on. So it unlocks your value. And saying, let's assume that if you've got right now, of course, some wealthy customers, if they do have a significant portfolio of, let's say, stocks in the brokerage house, of course they can get a loan against it, and use it as a, let's say, as it typically it's done, let's say, on the markets when some wealthy guys don't want to sell the stocks because they don't want to pay a tax, so they simply get the loan against it and still keeping the position, but unlocking the liquidity. Yeah? And right now for the, let's say, for the retail, it's impossible because you need to have like a certain asset, certain value of assets to be for your bank or for the company that you invested in to unlock this kind of utility. With a tokenized form, you can have I don't know, like a fraction of the share, put it in a certain protocol, and put it as a collateral and get a loan against it. We were talking about the lending protocol that is coming on chain. So that will be the additional value. So you can really get the access to your assets, and you can do whatever you can with your assets, and that's the kind of like a new utility and the financial freedom, how you actually utilize your assets. So that's what I like about the tokenization. We yesterday or 2 days ago, Coinbase announced that they will offer the product that if you've got a Bitcoin, you can put the Bitcoin as a collateral and get the mortgage against it, and it will be cheaper and accessible to you. So these kind of products actually are already, somehow used and offered by the financial institutions. So that's how they utilize the tokenization right now.
Yeah, I think it comes back to the comment I made in the beginning, where tokenization is just the beginning. If you can then use the tokenized asset to borrow against them, to use them as a collateral, then it opens the door to like multiple options, and that makes it really more interesting. I see that we're past the hour, so let's maybe take 20, 30 seconds each to maybe share any final words with the audience, and then we can wrap.
Well, let me say that I'm very excited to have all of you guys building on the XRP Ledger and contributing to it in your respective expertise. And I really love to I would really love to see that all of this is basically pushing the mission of democratizing financial access to people, for sure, but also leveraging blockchain technology for the things that are really the backbone, right? We talked about meme coins briefly, which is like more on the hype, more on the part, but having a foundation where it's like, the boring stuff, so to speak, is super, super important, because that's what 95% of the people want, right? Where they can invest, where they can like have savings and all this. This is like what gets blockchain technology forward. And ultimately, I would love to see like all of this replacing the traditional infrastructure with this new infrastructure.
Amen. Yep. I think it's coming soon. Yeah. Yeah. Go ahead,
Um,
David. Yeah.
yeah, it was, very interesting. Pleasure sharing this panel with you all, and definitely very excited to contribute to, this awesome field advancing and actually delivering. I feel like this has huge potential, delivering actual value to, everyday man and woman, basically materializing blockchain's promise. Um, and we have a pretty significant update coming up. In the next couple of weeks, we will be announcing huge product drops, and it really broadens the utility in terms of global usage of what you mentioned, Femi, earlier. Basically, that global coverage is of critical importance in this field. And yeah, Identomat is open for business, and looking forward to it.
Thank you so much, David, for being with us. Let's hear from Jakub, and then I'll wrap.
Guys, thank you very much for having me today. It was a great discussion. Of course, we could spend another hours discussing all these, let's say, aspects and from the different angles. I'm very happy to be on a XRPL family, and really excited. And I do like the support from the Ripple team and the community and so on. It's something unique in the blockchain industry, and very happy what's ahead. I need to mention that we are waiting for amendments to be, let's say, implemented. We already, let's say, developed whole the single asset vault protocol in the testnet. So we are ready to deploy, and I think that the Soil will be first protocol that actually will use this tech in place. So pretty exciting time ahead. So we'll see what's going on in the future. And I also we talk about the tech. Everyone is saying that it's in here for the tech, but I also hope a bit for kind of the relief that we saw in the last weeks, that it's only the beginning, and the crypto winter in the crypto space is over, and we will have the next few years that will attract more and more customers, and simply not only for let's say speculative aspects, but also will give them more, let's say they will dig into more into the technology, and it will drive also the adoption and so on. So pretty exciting times ahead.
Thank you. Thank you so much for being with us. It's always a pleasure again. So to just wrap this like really wonderful webinar that we did, and it's been like very like natural and casual at the same time, while being super informative. From the VS1 perspective, we're also super excited to be part of the XRPL family. We've been literally building like the I would say the template for other builders to use for lending and borrowing, and we're excited to like open source that and offer it to the community. At the same time, we are releasing our first products once the whole thing is ready, through partners, initially in Georgia, but also in Armenia, in Azerbaijan, and Dubai, in the whole like CIS region, Turkey as well. So the way we do it is through like brokers. These brokers are already compliant in their jurisdiction, so they already have the supply side of things, right? Like they already have the products that are ready to be tokenized, and then our approach is to give them the technology to emit those tokens on chain on XRPL, and then we help on the distribution side, and even through partners as well on the distribution side. So the idea for us is not to own the whole thing. is really to be as useful as possible to those potential partners. The more we talk to licensed brokers, the more they get excited. They're all like, yes, we want to do this. We don't know where to start. So let's do it together. And then let's do it in a compliant way. And that's also the reason why we've chosen XRPL, because compliance is not a smart contract on top of the core layer. It's embedded in the chain directly, and that adds a lot of like relief. Like when we talk into financial institutions, they're like, okay, can you do this? And we're like, yeah. And can you do that? Yeah, of course we can. And it goes against my, I would say, cypherpunk internal ethos that's still in me, where I was like, maybe 10 years ago, I was like, yeah, crypto is going to replace the financial system and we're going to cut the middleman. Like I was maybe a little bit on hopium. But I think today I get it fully. I think DeFi alone is not strong enough. It needs a strong link with TradFi. And that's why we almost coined another term when I think we met in London when we were talking about hi-fi, which is hybrid finance. It has DeFi components and TradFi components merged together to offer the best experience possible to the client, no matter where they are, who they are, as long as like we can be compliant and offer them transparency and automation, instant settlement, very low fees, then everybody wins, right? So on that, I think we've spent an hour and something babbling. Thank you so much for everyone that listened, and even if you're watching this after the fact, the videos will be shared with all the attendees. And then thank you so much, guys, for contributing to this webinar. And it's going to be a pleasure to even have you again in future episodes.
Sure thing.
Thank
Thank you,
you.
guys.
Thank you very much.
Thank you.
Good one.